studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, and welcome to the COB on this Wednesday afternoon. I'm Nadine Blaney.
I'm Juliette Solly. Great to have you on board,
Yeah,
Nadine.
I'm happy to be here, and I thought I wanted to come today because it's all looking pretty rosy out there right now.
Come in when it's doing well.
The market is up by, well, let's say 0.5%. That's the S&P ASX 200. The CIBO Australia Index closing for the session up around 0.4%. Really interesting today, wasn't it? Because we had that record lead-in from the US, and then it all got a little bit, lackluster heading into that inflation read.
Pear-shaped, you would say, heading into inflation. But then when you saw that the core inflation print came in a little bit cooler than anticipated, we did see a little bit more buying coming through. Of course, the key inflation print that the RBA looks at still above their 2 to 3% target zone. But a lot of economists out there saying, look, maybe we are done now with the hiking. Oxford Economics certainly saying we'll be on hold at 4.35% until the end of 2027. Paul Bloxham from HSBC said that yesterday.
Yeah, well, on the channel today, we heard from Christina Clifton from CBA, and she says that her base case is that the RBA holds from here. You can listen to that interview. It's up online. We also spoke with Stephen Walters from, I think it's Optimal Economics. He reckons that inflation will go higher from here, but he does point to the slowing in the economy and the jobless claims or jobless read going up as well. So, yeah, it's just really interesting how dramatically the market has repriced the chance for further interest rate hikes coming through this year.
Yeah, but let's get to the themes of the day because there are still these hike hazards. Both Stephen and Christina did mention it doesn't mean that there won't be another hike. And then we had the RBNZ on hold today, but also warning that the next move live is likely to be higher. We've touched on the cooling inflation, and of course that saw an Arvo ascent on the market.
Yes, I just want to reference another interview. I think you spoke with Tony Sycamore, didn't you, from IG today? Yeah, he's just talking about these U.S. record heights, saying that, look, it's getting a little bit dicey, chasing those record highs. He's saying that they're starting to see a few signs of divergence on the RSIs across those three indices in the United States. So yeah, the quote is, chasing this rally at these elevated levels is becoming more dangerous.
I love how much homework you've done for this show.
Trying to impress you, Jules.
Let's have a look at the sectors of the day. Kicking it off with the tech stocks. Megaport there up by almost 9%, NextDC up by 4%, WiseTech up 1%.
Yeah, taking a look at some of those consumer discretionary stocks as well. Obviously, we've got that, I guess, improved outlook when it comes to rate hikes for the consumer. But KMD Brands, that's idiosyncratic. They actually announced, strategic review, et cetera. But shares are just at 6 cents per.
And Endeavour was lower, of course, getting out of that or moving some of its portfolio with the wine business. I'm reading mining matters, and that's why I'm saying mining.
So here's a look at some of those big miners. So it was, a good contribution coming from the likes of Rio Tinto, BHP, and if you look at, the market cap weighting, BHP helped to move this market higher in a big way. Also, Goodman Group up by 3.8%. I think it had a quarterly out, if I'm not mistaken.
Yeah, let's have a look at some of the other corporate stories that we're following today. Westpac ordered to pay $26 million in civil penalties, shares down 1.4%.
Yeah, Web Travel Group, it was the stock of the day. I had Henry Jennings and Andrew Whiteland along for the telethon. If you watched it or listened to it, you'll know what I'm talking about it. But its share price did really well on pretty solid annual earnings. They saw it quite differently. We'll bring you that in just a moment.
And Southern Cross Media, Gina Reinhart becoming a major shareholder. She's now got 9% of the company. It was up almost 6%.
Yeah, and there you go, KMD. Most gain in 8 months on a quarterly sales rise and those cost-saving measures being brought in.
Endeavour Group, though, as we mentioned, flagging a major restructure of its wine operations, also slashing its dividend payout. Yeah,
targeting cost savings as well. I think that might be a theme for those companies that are struggling in this environment. Nufarm, it's been a while, but it's hit a 10-month high on strong half-year earnings and a lower annual CapEx guidance.
And GYG will leave the ASX 200 at the next quarterly rebalance with Temple & Webster to replace them, according to Morgan Stanley. GYG, of course, you weren't here on Friday when they announced they're leaving Chicago.
I heard. Yeah, they are backing out. I spoke with the CEO, Stephen Marks, last earnings season.
We played that grab on Friday.
Yeah, thank you. He was in Chicago, really was sticking to his story then. But look, I suppose as a shareholder,
Gotta know when to fold them, as they say.
Yep, I like it.
All right, let's talk to Mark Gardner from MPC Markets.
Good afternoon.
Good afternoon. Your view on the inflation print today?
I tend to agree with more than likely done. I think what economists generally were so frightened of inflation because that's the traditional economics view is that inflation is the number one boogie monster that you've got to take care of. But I've always sort of maintained through this that obviously prices at the Bowser and fuel prices is just a massive dent on the business's capacity to spend, increase in their costs, reduction in their margins, but consumer obviously their discretionary income as well. And we saw that in the labour market numbers last week. But I think we'll probably sort of the spike in inflation's kind of happened. Maybe it stays around here. The RBA is not going to be overly comfortable with it, but there's not much the blunt instrument of monetary policy is going to do to that. It's about Hormuz, and realistically, it will be transitory. Just it's a matter of what stage. But I think it is definitely driving a wrecking ball through a lot of businesses and personal budgets. So it will dent the economic growth, and we had that back in the I think Desert Storm 1990. We went on this massive run in interest in bond yields of about 100 basis points, and then it actually reversed, and they started easing because those high fuel prices just basically meant that people had less to spend and businesses had less to spend. Yeah. And we're seeing that in the consumer confidence numbers in the States. They had consumer sentiment, I think I think they've had a number which was the worst since they recorded it since 1952. So. It's a hard balancing act for the RBA, but I would be more wait and see if I were them than I'd be, getting aggressive.
Well, we will see, won't we? Okay, so when it comes to that comment I said earlier about chasing U.S. markets at these record heights being a bit dangerous, do you think that's a fair statement?
Absolutely, and kudos to Tony Sycamore. He called 30,000 in the NASDAQ quite some time ago. It was a good tweet today, and man got his target, but and that US market is so much a momentum and technically driven market. It's the sort of thing you want to be overlaying, probably more charts and momentum than you do fundamentals overall. They're very inherently bullish people, but at these levels, realistically, we're starting to see the likes of SanDisk and Micron, which Micron was up 19% last night, but from a technical standpoint, I think SanDisk had an overbought signal that no one can find a stronger overbought signal in any stock in history. So at 99 out of 100, 90's overbought. So even a slight breeze could basically knock this over. And a lot of this revenue that is very much built on the hyperscalers. 50% of their revenue is dependent on each other. One of them has a bad announcement, it's going to affect all of them, and then obviously that concentration isn't helping the market. It becomes a risk. So, I think at the moment we're sort of expecting a dip into the midterm elections. I think there's some pretty good value in the Australian market, particularly, but. We're always going to watch Big Brother, so we're trying to be a little bit patient and sit on our hands and look to buy the dip in the next 6 months.
Now, I know the answer to this, but viewers may not. What do you think about some of these consumer stocks, given everything we've just touched on with inflation, interest rates, all the updates that we had today from the likes of Webb, KMD, I should say, and Eagers Automotive?
Eagers Automotive was a really good result. 70% increase in their backlog. They're absolutely killing it. Just that they're a beneficiary because they're selling the BYDs and have the license there. I think that would have been up a little bit more, but they're looking at expanding overseas, and Australian investors get a little bit nervous. Hence GYG had a really positive result the other day because they're actually leaving. So it's just not the same. But KMD I wouldn't go anywhere near at the moment. It's a turnaround story there's way too much turning around to happen. Stuff like Webjet, I mean, it's growing at 4 times the underlying market, and cost efficiencies of like 38% due to AI. I think it's actually not looking too bad overall. So, but would I buy them now? No. Sentiment in Australia or on the ASX at the moment, we're really leaning towards missing out on the first bit of the recovery to get confirmation, because you can, with biannual reporting seasons essentially, and the quarterly updates don't move it. basically there's no catalyst for it to go back up again for a while.
Well, interesting. So do you apply that same thinking to small caps in Australia? We spoke with Lucas Good from IML earlier today, and he was saying that, there could be some real good gains made with some of these really beaten down industrial small caps, for example, particularly if we don't see interest rate rises coming through to the extent that we thought that they would. I mean, US small caps have been going gangbusters.
Yeah, look, I mean, private equity, it's like a buffet on the ASX at the moment. I think overall, because we don't have any of that semiconductor and memory part of the market, I mean, we probably seem way more dour than we actually are. But I mean, we start to get some clear air and a rally maybe post midterms or coming into Christmas, etc. And we get this Hormuz situation out of the way. Trump calms down. Your problem's going to be not having enough capital to deploy because there is a lot of bargains out there. And those industrial, those companies doing the energy rollouts and things like that, or data center, Southern Cross Electrical, IPD Group, and things like that, they're looking extraordinarily cheap. But as I said before, we're just sort of waiting to see confirmation that there's a turn in a lot of these small caps before we get in, because otherwise your capital's kind of just sitting there. Waiting for the next earnings result, etc. So we're just trying to be patient, which is pretty hard to do sometimes with some clients, and we're playing quite a bit in the US stocks and the memory and chip stocks at the moment because there's just definite momentum there.
All right, be patient. That is always a very wise, I guess, piece of advice.
But a hard thing to do.
Yes, yeah.
Yeah, it is.
True. Mark, thank you as always. Mark Gardner from MPC Markets.
All right, let's get to the stock of the day. I did mention it was Web Travel Group. I kept misspeaking earlier on. You almost said Kathmandu, but it's KMD Brands.
Yes.
They change these names
Change
and
their
it takes
names
us a while. But Andrew Whiteland from DP Wealth Advisory and Henry Jennings from Markets Today did see things a little bit differently when it comes to the Web Travel Group.
Note the fact that it's a PE, Webjet is a PE of 8. Forecast earnings per share growth of 29% next year, so that certainly is a positive. And that consensus number, which is somewhat laughable, the 13 analysts who follow it suggest that it's got a target price of over $5 a share relative to that $2.45 that we just saw in there at the screen at the moment. But to me, this is, if you're doing sort of the gold standard of what a consumer discretionary stock looks like, anything in that travel space would be it. Too many moving parts at the moment, so it's a hold.
Yeah, this is the WebBeds business in terms of hotel back-end management. And I've got to say, I thought this was a pretty good result, given that, the backdrop, of course, is the disruption to the Middle East. The Americas bookings grew 41%. That is a big number. Europe added 19%, so that is not a bad number either. So, a lot, this stock has suffered considerably after that Spanish audit announcement that we saw earlier this year. So that's really put the kibosh on any rally.
Well, 10 stocks picked by you, 2 experts, 1 hour.
Let's get to the companies that have been nominated by you.
It's like a witch hunt over there. Everyone hates data centers.
Just remember that most of their earnings are offshore, so there's no franking credits.
The call is brought to you by Centuria, an ASX-listed property fund manager with $21 billion in assets under management. Want to diversify beyond equities? Explore the Centuria Sydney CBD Prime Office Fund at centuria.com.au.
All right, let's have a look at some of the market leaders on an up day today. Megaport had a good session, up almost 9%. I'll let my friend tell us if there was any news there.
No, there wasn't, nor for Austal either, but a little bit for Infitril. I would imagine it could be broker moves, and I'm right, coming in the wake of its result yesterday or the day before. So its price target been lifted by Forsyth Barr by 8% to $18.90 per share.
All right, the laggards, I'm pretty sure ASX is at the top there, and that is on broker downgrades. We had that biggest fall in 26 years yesterday, more weakness today. with Citi, Morningstar and Jefferies, I believe, all downgrading the stock. Endeavour, of course, under pressure too as it moves to exit one of its underperforming wine portfolios, Nufarm Pharmaceuticals. IDP had a broker downgrade as well.
Yeah, Nufarm held his AGM. I'm not sure what actually came from that, but clearly a little bit of consternation around that. Let's get into the smaller end of the market. Ecograph, Sky City Entertainment, both having a really good day. Sea Forest, we've interviewed that company before. It's pretty interesting. Up by close to 16% today to $2.45.
And in the laggards in the small end of town, Antio Tech. Now, we interviewed them this morning I interviewed them. Gosh, time goes quickly, doesn't
Meryl
it?
Gray.
Yeah.
It's fair to say that their share price has been on such a tear, so just giving back a little bit of its major gain yesterday.
Yeah, very good interview. I found that really fascinating. I didn't know much about batteries. I feel like I do a lot more now.
Good for you.
All right, let's have a look at what's happening tonight. US quarterly earnings including Marvel, Salesforce, Best Buy and PDD.
Look, it was a big day today, obviously, with that monthly inflation read. It's inflation, inflation, inflation when it comes to the RBA. Tomorrow we do get the ABS household spending report. We also get some earnings coming from Champion Iron, Select Harvest, Vulcan Energy, and Yancoal. We've had a bit of corporate news. We've had enough corporate news to keep us busy and interested, I think. Jules?
Yeah, we certainly have. All right, so let's have a look at where the local market is finishing the day's trade. Firmer by 0.4%, 1677. The S&P ASX 200, meanwhile, is firmer by 43 points. I think, no, 60 points now, 0.7%. So it just rallied right into the close there. 8717 for those that love a technical. It's back above 8,700 points.
Yeah, that psychological level. And we've got US futures mildly positive as we head into the European session. And I think, it's stating the obvious, but a lot of sentiment will be driven overnight by the headlines coming out from the Middle East. Of course, today we had Iran saying that the new US strikes violated the ceasefire. Interesting to note, though, that we did still see pressure coming through on the price of oil. We also have Israel continuing to pound Lebanon with strikes and saying that it's expanding its ground operations past the security zone. So clearly a long way to go there, although you'd never know it by looking at US markets.
No, indeed. All right, that does it for the COB. We'll catch you from 9:45 a.m. Eastern tomorrow.
Have a good night.